Welcome to World Knowledge Channel. Around the world, there are major financial crises that have had a profound impact on the global economy. Here's a look at 6 of history's most notable crises, from their causes to their consequences. Financial crisis is an economic situation when the financial system and financial markets experience a collapse or severe price decline. This can happen when financial institutions, investors or consumers lose trust in the financial system, causing a decline in asset values and currency values. Financial crises can have a negative impact on the global economy and sometimes lead to economic recession. Between the 19th and 20th centuries, there were many financial crises around the world, most of which were related to economic recession and banking crises. So what was the biggest financial crisis in history like? Let's find out through this video. 1. That was the Great Depression of 1929 to 1939. The Great Depression in America in the decade 1929 to 1939 was an unforgettable event for the global financial community. In the early 1920s, many people flocked to invest in stocks because they saw it as a bargain. The consequences that followed the dark day were a series of banks closing, companies declaring bankruptcy, and millions of people losing their money overnight. This financial crisis not only affected the United States but also had a strong impact on the entire economy worldwide, leading to a Great Recession that lasted for 10 years, 1929 to 1939. 2. That was in the 19th century, my friend. Long Depression, 1873–1896. The financial panic of 1873 triggered a series of economic depressions in Europe and North America. This crisis stems from a number of causes such as: in the United States, in the period 1873 to 1879, more than 18,000 businesses, 10 states and hundreds of banks went bankrupt. Unemployment peaked in 1878 with an estimated unemployment rate of 8.25% to 14%. During this period, England was said to suffer the most serious consequences. Britain lost some of its industrial leadership over the European economy and suffered a prolonged recession in the agricultural sector. In some countries at that time, this crisis was referred to as the Great Depression until the actual Great Depression of 1929 appeared. 3. OPEC oil price shock of 1973. The financial crisis began shortly after OPEC members announced an oil embargo and suspended crude oil exports to the US and its allies as sanctions. The embargo has caused severe fuel shortages and pushed oil prices to all-time highs. Higher energy prices will increase overall transportation and operating costs, leading to high inflation. Economists call the 1973 period the period of stagflation. This implies economic stagnation along with inflation. 4. Dot-com bubble. The 1990s were marked by the rapid development of the Internet. Besides the positive aspects, this uncontrolled development sparked the dot-com bubble. At the time, technology companies were overvalued relative to their true value. Over time, many businesses worth millions of dollars have appeared and been listed on the stock exchange. Millions of people are choosing to invest their money in stocks to capture once-in-a-lifetime opportunities. The dot-com bubble only officially burst in October 2002. When financial reports revealed the true losses of technology companies. Stocks bottomed out for a long time. Immediately after the crisis, the United States officially entered a recession. 5. Financial crisis of 2008. The crisis stemmed from banks making it easier to offer mortgages to people who couldn't afford them. As debt matures, loans default, bad debt increases and financial and real estate bubbles burst. At that time, real estate prices hit rock bottom, leaving millions homeless. Markets crashed relentlessly and unemployment skyrocketed. The entire banking system, led by Lehman Brothers, was severely affected. Starting in the United States, the crisis quickly spread to other countries and caused a global crisis. A new financial crisis is predicted in 2020 as the COVID-19 epidemic spreads globally. But with effort, countries continue to take action to curb inflation, reduce unemployment, encourage investment and increase the working capital of their economies. 6. Effective financial management with My VIB application. The root cause of financial crises is the lack of close financial management. That also shows the importance of effectively managing personal finances. Currently, there are many methods to do this. One of them is using mobile banking applications, such as the MyVIB application. VIB International Bank's mobile banking application can be a choice worth considering because of its reputation, convenience, ability to make transactions anytime, anywhere, along with exclusive utilities from VIB. Will definitely bring you wonderful and reliable experiences. 7.1 Stone Century. Economic crisis of the Roman Empire, 33rd year AD. In ancient Rome, wealthy people and especially members of the royal elite regularly granted people loans with interest. However, in 33 AD, these loans became increasingly scarce, leading to a severe economic crisis. This scarcity stems from the provisional authorities promulgating a law requiring creditors to invest 2/3 of their asset value in real estate on the Italian peninsula and debtors to repay the remaining amount. Equivalent money from borrowed funds. In fact, creditors have asked debtors to pay the full value of the loans. Borrowers are forced to sell land, owned by them, to repay the debt. Due to increased demand for land sales, land prices on the market dropped sharply. Borrowers cannot make enough money from selling land to repay their debts, so they are forced to borrow money from loan sharks. As a result, land prices fell, credit starvation became widespread and interest rates skyrocketed. Many borrowers, unable to pay their debts, were taken to court and had their assets confiscated. 8.3 Road Century. The crisis of the 3rd century, also known as the Imperial Crisis, occurred in 235–84 AD. This was the period when the Roman Empire was divided into three political entities: the Gallic Empire, the Roman Empire and the Palmyrene Empire. The state of division and social instability at that time stemmed from the following causes. Since the Pax Romana, the economy of Imperial Rome had depended largely on trade between Mediterranean ports and via extensive road systems to the empire's interior. Widespread civil unrest made travel less safe for merchants, and the resulting financial crisis made exchanging goods very difficult because the currency was devalued. Therefore, trade activities and the economy are heavily affected and fall into crisis. 9.17th century. Tulip Syndrome. The Tulip Syndrome that appeared in the Netherlands around the mid-17th century is considered the first economic bubble in world history. At that time, people rushed to buy tulips, causing flower prices on the market to skyrocket. There were times when a rare tulip bulb was sold for $750,000 in today's value and estimated to be 6 times the annual income of a normal person. However, the tulip market suddenly collapsed in February 1637. Investors sold off tulips in panic, causing prices to plummet to 1% of their previous value. In just a moment, many people's assets evaporated and virtual profits on paper were wiped out. Looking at the consequences of world economic crises that have occurred in the past, we can understand why when the COVID-19 pandemic broke out, investors and policymakers feel concerned about the prospect of such an economic recession. Especially in the current era of strong globalization, if only one influential country experiences a crisis, the consequences will spread to countries in the region and around the world. The biggest financial crises in history are important for understanding the impact of these events on the global economy and for learning how to prevent and address similar problems in the future. They are valuable lessons about the causes and consequences of economic downturns, strengthening risk management and improving fiscal policy. If you find the video useful, please share with more people and subscribe to the channel. Like and have any questions, please leave a comment below. Thank you for your interest in following. Hello and see you in the next video.